The market takes shape as an ending diagonal. What does this mean moving forward? Find out next on Invest with Jacob. So the market pushed higher on Friday over the downtrend line, starting what appears to be the A wave of 3 in an ending diagonal. I know that sounds like a lot, and we'll get into it in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob. And I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, over the weekend, I was watching my buddy's boxer, and we were playing, and he got me good in the face, as you can see, the scrape all the way down. And that's why we didn't have a video last night. But we're back today and ready to roll. All right, guys, so on Friday, the market pushed over the downtrend line, starting wave A of 3 in the ending diagonal. I want to point out that ending diagonals are very volatile in nature, and even as we move up in this wave 3, we're still going to see a lot of chop. Now, that doesn't mean we can't trade it. It just means that we're going to have to fade some pullbacks and not panic when the market changes direction. As I look at the overnight action, we held 42.10, which would be support for a wave 4 pullback, so it does appear we could have a wave 5 higher high before pulling back in B. This is best illustrated on the chart, so let's jump in and take a look. Okay guys, so here we are on the 1-hour SPX chart. I want to illustrate why we think we are in an ending diagonal. So off the low back here around May 12th, we had a 3-wave structure up here. 1, 2 back, and then 3 up to the top of A. 3-wave structures are generally corrective unless we are in an ending diagonal. We don't know that we're in an ending diagonal yet. If this was corrective, we would then be followed by a 5-wave structure down below this low, which we did not get. We got a 3-wave structure, A, B, C down to B, that was not lower than this low. So when that happens, okay, now we have 2 3-wave structures, and we did not make a lower low. So that allows us to start to identify that we're in a different trading pattern than a normal Elliott Wave cycle. So at the bottom of this B wave, we get 5 up here. So C waves are commonly 5-wave structures. With a 3, 3, 5 here, it tells us that the ending diagonal has now come to the forefront as our best option of tracking this trade. There are really just 2 basic scenarios. The primary scenario is that we're moving up in wave A of 3, and one of 2 things has happened. Either we topped on Friday and we're pulling back, or as the futures are indicating right now, we pulled back in a wave 4 and we have one more higher high to go in that wave A before we pull back in wave B. Now, I know this sounds pretty complicated and convoluted, and it is. Ending diagonals are hard and they're volatile. So the basic thing to understand here is if we break 42.10, then the next support level is 41.90 for our wave B pullback. We should hold that level and then start wave C higher. Okay, if we do not break 42.10, then we should look for a wave 5 higher up to the 42.40, 42.50 region before pulling back in wave B towards 41.90. Okay, if we break 41.90, and this is the alternate scenario, so the primary scenario is we're moving up in A. The alternate scenario is because we only got 3 down in C, that's not common. Usually you get 5 waves down in C. So because of that, it is possible that this was the A of C, and then we bounced up in B of C here, and then would have another pullback low to 41.50 after that. Now this scenario comes into play if we break 41.90. 41.90 is the major support for a wave B pullback. Break through that and it turns into a wave C of C targeting 41.50. So just to clarify, right now we are assuming we are in wave A, moving up. Okay? The indicators that we will be in wave A are that either we make a higher high today or we hold 41.90 for a pullback support of B. The indicators that we are not in wave A up and we are in wave B and setting up for a wave C down is breaking 41.90. So 41.90 becomes the really key level to watch. Break through 41.90 and we head down, bounce off 41.90 and we head up in a big rally. And that's where we're looking to enter. So hold 41.90, we buy and enter. Break 41.90, we're headed down towards 41.50. And that's the basic update. So guys, if you want to know in real time when we're buying and entering these trades, you need to get in my Facebook group. There's a link down below. The only requirement to join is that you subscribe to this channel. So go ahead and subscribe to this channel and hit that link and get in the Facebook group. We have a Slack channel, which is just a chat channel. It's free to get on, where I give out all of our trade alerts and all of our buy and sell alerts so that you know exactly what we're buying, when we're buying it, and when we're selling it. Okay, guys, so key takeaways today are we're basically watching 2 levels, 42.10 and 41.90. 42.10 bounce and hold, which it did overnight, continues to stay above that. We're looking for a higher high. 41.90 bounce off of that, and we've completed the wave B pullback and are headed up in C. break through 41.90, and we are headed down toward 41.50 to complete wave C down in 2. So that's the update for today. Happy trading. I will talk to you tomorrow.